What's up, y'all? We're back again with another video. In this video, I'm just gonna be explaining a couple steps on how you should start day trading and a little strategy that I'm using that you guys can use to get used to. And as well, I'm gonna see if I add like psychological things that you can get in the habit of that would help you in the future with trading. But let's get into it. Firstly, we're gonna go through the steps and how we should move on from the beginning and as you go with your journey. So first step I think y'all should take. So first, I believe you should just learn the basics, the fundamentals. There we go. My fault. A little slow right now. Fundamentals. What does that bring in? It brings in candles, price action, confirmation patterns, and trends. That's what you should first do. I'm gonna make videos. I have already made videos for TikTok, but I'm gonna make them in I'm gonna do it in parts. For each and every single one of these steps, I'm either gonna have two of them together or a full video just for one step by itself. But this is the first thing we should do. Secondly, is for sure one thing you should do like almost immediately just to get a little bit of experience is open a demo account. And paper trade. With this demo account, just for the beginning, get used to lot sizes, risks, and reading the market. Okay. Now for the third one, it's pretty simple. It's not too much to take in. I'm gonna do it in like 4 or 5 steps of what you should do. Obviously, each one goes into specific detail, but I'm gonna make it pretty simple to look at and pretty simple to follow. So yeah, first is fundamentals, candles, price action, confirmation patterns, trends, and then secondly is just opening a demo account and paper trading, just so you can get used to opening a trade, whether it's a sell or buy, reading the market, and so on, and also just learning how and learning how you like the charts. And because as well, that is another psychological thing. Some people do good when it's the charts like dark and gray and black candles and stuff like that. There's other ones like me where I like the bullish candles blue and then the bearish candles red with a white background and all that stuff. Like it all depends on your preference, what makes you feel comfortable, what allows you to read things better, all that stuff. It's all like a psychological thing. And then thirdly, this is when you're gonna seriously start an actual demo. It's gonna be a demo account, but like you're seriously gonna take trades. Like you're not gonna be practicing this amount of risk or none of that. You're gonna have $10,000 account. You're gonna have a set risk. So for example, let's say $500. You're not gonna risk anything else but $500. You're not gonna risk more. You're not gonna risk less. Doesn't matter if you've won 10 trades in a row and you're up like 18, 20K. You're gonna keep the risk the same no matter what, so that you can get the consistency with the strategy, and so you can actually learn. Okay, this is actually going good, and you can calculate everything appropriately. Because if you're risking less or risking more or changing it consistently, you're not gonna be able to find any consistent statistic on how much you're making or how much you're losing, because you're constantly changing how much you're risking. So yeah, thirdly is gonna be again opening a demo account, but you are setting your rules, strategy in place, and starting. You're setting your rules and strategy in place and trading the account as if it was live. Okay. And in parentheses, 2 to 3 months. No, not even 2 to 3 months. Fourth, these are I would say the final, or yeah, because you can either go in 2 different ways. Okay, this is when you start the live account. With this, it's all gonna depend on how much you're really willing to put up and risk, and okay with losing completely. It all depends on how much money you make, what you're comfortable with, and all that stuff. Because some of you can maybe put 100, some can put 1,000, some can put 5, some can put 10,000. All depends on your preference or what you're willing to risk. But we're gonna go around average. 1,000 for sure. Most people can save up for, and if you're confident enough, you'll be willing to. So we'll say live account, $1,000. Risking anywhere from 50 to 80 a trade. Same plan as on the demo. Now, real. And this is why I said it all depends on the path you want to take. Cause the reason I say live account first is because if you're willing to risk your own money and you're capable to do it and become profitable and become consistent with it, then when you go ahead and you start doing funded accounts, it should be cake. You shouldn't really give a fuck about the money. You're putting in less capital to trade with more capital. So if anything, it's just gonna make it easier for you. And as well, if you really like the live and it goes way better than you think it was gonna be, you could just stay doing live and you're gonna be fine with no rules, no profit cap, no daily stop loss, no none of that. You're able to do whatever it is you are willing to do, and you don't have to worry about anything basically, just taxes. But that's it. So the fifth one, it's optional. Fifth, because with this, 3 to 500K accounts as 3 to 500K. Each of those, let's say you make 2% a week, right? That's 6K in a week. Realistically, you can easily make 2% in one day. So if you take 1 to 3 good trades a week, you're looking at, let's say you win 2 and you lose 1, right? Let's say you're risking 500. You made 4, you lost 500. You're up 3,500. Then it'll be 100 off of that, then 200 off each. So it'll be 700 they take out. So you're gonna be making like around 2,800 a week, right? 2,800 a week. You're gonna be making around 10K a month just off of those 3 accounts. And since you're already so consistent with the live account, once you get to the funding, it's gonna be cake. Those rules are basically not gonna even be in place because they're not gonna affect you in any way because you already are accustomed to trading you're accustomed to using your strategy, and you already adapted to it, to the fact like, oh, okay, just gotta risk this much. I don't have to over exceed. I have 3 accounts, so like you are able to adapt the way that you want to adapt, so it's comfortable for you. And if you don't like it that much, you could just stick to live, because you've already done live for so long that you don't really need to go to the funded if you don't want to. All you gotta do is make a little bit extra money so you can put it into the account and grow from it. So that's really pretty much all it is. These are the steps that I think you should take in order for you to start, if you're gonna take it seriously. It is very I don't know the word, but it's not too into detail what to do. But realistically, it's not that hard. What's hard is being consistent with it. And as well, for learning, I'll give 2 people that you can learn from. 2 people. There's FX Alex G and Trades by Side. These are the 2 only people that I would generally be like, watch them and don't watch nobody else. Watch their strategies, and that's it. Because they low key, they're both swing traders. They both, one does ICC, the other one just price action. But realistically, if you look at it, it's basically the same thing, the same shit, just in a different format. But it's the same exact fucking thing, realistically. And in simple terms, this is what it is. Higher time frame. I'm gonna explain the strategy as well. We're gonna have it separated in different categories. Daily, 4 hour, and 1 hour only for analysis. This is for day trading, I would say. We'll do day trading, which realist. Actually, yeah, we'll have daily still. This is gonna be for day trading, only for analysis. Then we have 5 15-minute for execution. This is for execution, because I don't know if you guys were able to pick up my voice. Execution. All right. So for day trading, I have it here. You guys can see it. For day trading, daily, 4 hour, 1 hour, only for analysis. And then 5 and 15-minute, only for execution as well. Whoa, now, boy. Only trade from, we'll have 9 11:30 a.m. You can trade within London session if it doesn't ruin your schedule. For me, I'm in Miami, so that shit's at 3 in the morning. I would advise you to be better, especially if you have a job, to not stay up so late doing London session. It'll be better for you to go to sleep early, wake up New York session, trade only New York session, and while you're at work, do not be fixating on the charts, trying to get in entries, none of that. Only trade New York session in the morning, or London session, depending on however it fits your schedule. But those are the only sessions you can trade in: London or New York. But if you trade in one, do not trade in the other one. Trade in one session, just for now. Once you're already good and you're profitable and you already found your edge and you already know what you're good at, then you can go ahead and do what works for you. But for now, only stick to one session. Don't be changing anything. And then the only time you can look at the market other than New York session or London session, whatever session you're trading, only time can be 8 p.m. to 12 p.m. Because that's a couple hours before your actual move that you're gonna take initiative in. So you can have a pre-analysis of what might happen or where price might want to go. You can have it set up so then when you wake up in the morning and you're doing your analysis, it's a little bit easier for you to find everything. But you can only enter trades in that one session you choose to have, which is either London or New York. Okay? And this is for both, whether you're swing trading or day trading. Even if you're swing trading, you can only enter in one of those sessions. Okay. And now for swing trading, daily, bueno, weekly, daily, 4 hour, only for analysis. And then 1 hour, 15-minute, 1 minute for execution. And by execution, I mean entries. That's where you can see the actual break on a lower time frame, all that stuff, to where you can enter and get a more precise entry, and you don't have to have a major stop loss. You can just have it above the high or low of the previous structure when you enter. So it just makes things easier and more precise. So this is for that. So boom. This is, oh, you guys can't see it all the way. Only trade from 9 to 11:30 or the London session. But if you like again, if you do one, do not do the other one, because then you're gonna, if you trade London, you're gonna trade London and enter New York. No, stick to one. Get comfortable with it. Once you're at that level of where you can, experiment here and there, then you can go ahead and do that. But for beginning, this is what you're gonna do. And then if you want to day trade or you want to swing trade, day trading is within the session or within a couple hours. Swing trading is a couple hours to a couple days. Okay, so it all depends on your scheduling, your routine, what would be easier for you, because you don't want to make things difficult. You want to make things that fit within your schedule, and where it's not gonna take too much of your time where it's stressing you out. Okay, now for the strategy to be explained in the most simplest way possible. Firstly, we're gonna have this split up into different time frames here, and we're gonna make it easier for y'all by having this. So we're gonna have 1 hour here, 4 hour here. We're gonna have 15-minute and then 5 minute. So on the 4 hour, you're gonna see a big push like this, right? But if you go to the 1 hour, yes, it's the same movement, but what you probably see is price doing this, right? Then there's 4 candles. You see, actually, this is perfect. I know how to make it simpler for you. Boom. I'll copy here. Boom. Okay. This is simple terms. And bomb this. So basically, don't pay attention to the bottom ones yet. These we're gonna get out the way, because that I'm gonna have to add a lot more candles. We're gonna do it very simple. Well, basically, this is how it is. On the 4 hour, you're gonna see this one candle, and it's bullish, right? But on the 1 hour, if you go down, you're gonna see it more detailed. Yes, it was still bullish, but as we can see, it was still bullish. My fault, but it's just bothering me because they're all like different sizes. There, we'll just leave it like that. Boom. Whatever. Okay, boom. Leave it like that. So as we can see here, 4 hour, it's bullish. Open at the bottom, close at the top, bullish candle, boom. But as we can see here, the 1 hour. So instead of one candle with the 4, we're having 4 candles with the 1 hour. So it's basically the same thing here, just more detailed. As you can see, it went up, came down for like 2 hours, and then pushed back up and closed up here at the same place it closed here. Because once these 4 hours passed and it closed that last hour, the 4 hour closed. As you can see, it was bullish. Here, it was also bullish. Just had a little pullback within that time frame, right? So then on the 15-minute, what is it going to look like? It's going to look like this. It's going to have that uptrend of it being bullish, right? And then it's going to have that downtrend of it retracing, as it did here on these 2 hours, right? It's going to be here, and then it's going to become bullish again. It's going to do all of that. And it's going to close at the same spot because for the 15-minute, every 4 times that the 15-minute candles close, that's 1 hour that passes, right? Because it's 15, 30, 45, 60. So then the hour closes. So each of those, every 4 times that the 15-minute candle closes, an hour candle closes, and so on. Every time the four 1 hour candles close, a 4 hour candle closes. So it's all the same thing. It's just every time you go on lower time frame, it's going to have a more detailed look at what's happening overall. That's as simple as I can say it. 5 minute, I'm not gonna have it like that. I'm gonna have this as a daily instead. Oh shit. It's literally that simple. It's that simple. So how am I gonna explain this even better for you guys? Is now that you guys understand this and how every time you lower the time frame, you're just looking at a more detailed look at that higher time frame movement. So what are we gonna do? First I gotta get rid of all of this. Man, I hope you guys are able to hear everything I'm saying. I'm trying to be as loud as possible, so like the mic picks up my voice every single time I say something. So you guys understand the hours that you're supposed to be trading, the time frames you're supposed to be using, and what you're gonna use them for. And you already understand that the lower time frames are just a more detailed look at the bigger time frames, right? So this is how you're gonna do it. Now we're gonna go to the chart, right? You guys can't see as well, so I'm gonna lower it so you guys can see what time frame I'm in, right? So we're gonna go first to the daily, right? Get rid of all of this. We're gonna go to the daily. What do we see here? We see this trend that was being respected. Price broke under, as well broke under this structure point where price was respecting the last 2 times that it touched, as we can see. If you want to be more detailed, it can be right here. Boom. Boom. Big gap. Price came. Yes, it came down here, but it respected and closed above the zone. Touched here, went above. And then here, went ahead and broke past it. We see that price is bearish, that it broke past the level. We can see here as well that it has respected this other higher high that was created. Damn, this higher high that was created couple days ago. Well, not a couple days ago, a couple weeks ago. And we can see that price broke below, came back to this area of interest, and rejected it with a bearish engulfing candle after a doji. And now we're retracing, right? We can see that right here. You can see this area, boom, touched. It has also been touched here. And then it broke below, came back, and created this candle. Created this candle pattern right here. Doji, bearish engulfing, and now it's on the retracement. So now what do? Now we go to the 4 hour. What do we see here on the 4 hour? Okay, we see structure came here. Get rid of this so it's a little bit easier to understand. Get a better area of interest that's more detailed. Okay, we can see, all right, we're bearish, as we can tell. Price broke below, made a lower low, and we're still within the zone. What is the zone, you may ask? It's this area right here. This is the high. This is the low. As long as we're still within here and it doesn't break above, we're still bearish, right? So we get more into detail. What do we see here? We see structure, boom. Came back to this structure and respected it. So we're going to have that set up there. We see that this is the lowest point on the 4 hour. We can see price came down here. So if we go to the 15-minute, I'm sure price is going to be a lot lower. Look, you see here, boom. What do we see? We see a fair value gap that was never retested. So we don't know if it's going to be respected or it's going to be disrespected because it has no background on it. There's no data whether this one has been respected or not, right? As well, we can see here that this seems to be a good level that price tends to respect. So we're going to have this line right here. And we can see 1, 2, 3, 4 touched here. So we're like, okay, that's another area where if it touches and shows consolidation, if we're in a sell, we can most likely take profits at this level because it tends to be respected a lot. So here at the 15-minute, what do we see? We see, yes, we're bearish, but we're seeing smaller movements in a smaller time frame. Because as we can see here on the 4 hour, yes, we're bearish, but we had a very bullish engulfing candle to the upside. But look what we're going into. We're going into this previous area of interest that was respected the last time it came into here. We're going to go back down to the 1 hour. What do we see here? We see price came up, rejected, had a downtrend, then it had an uptrend back to this level, broke above this structure point, and closed below this one. It depends which one you want to call an elbow, because realistically, they're both an elbow. Because boom, then it came here, and then it dropped, right? And then bam, became bullish. So now we're waiting for a retest. So then we can either stay in the 1 hour, but on the 1 hour, we would have to wait for it to break under this one. But if we go to the 15-minute or the 5, what can we see? We can see price came up aggressively up here, respected the line, but then it broke. After we see that break, price tends to come back to retest where it breaks at. For me, I tend to put it on the opposite candle. So let's say we're looking for sells and price breaks structure and closes below here. So we can see this was the previous structure and it broke it, right? Boom, broke past it. I'm going to have it on the last bullish candle before that break. So as we can see right here. As we can see, price comes, tapped it, and showed rejection. So what are we going to do? What we're going to see is how price reacts to it. If price reacts, shows a rejection, then we enter, right? So boom, showed major rejection, closed here. And then stop loss would always be above the previous structure. So in this case, we can see there's a fair value gap here on the previous bullish engulfing. And there's this elbow that was here. If price breaks this structure as well, breaks past this fair value gap, it's most likely going to go to the upside. So we don't have to have stop loss all the way up here or at this high right here. We can have it here at this body of this candle of the fair value gap. That's how I tend to do it. And then realistically, we can either have take profits here for you to take partials for a 101. I tend to not take 101s if I'm being honest. Or we can go back to the higher time frame where we were initially making the analysis. We already know it's bearish. We already know the structure of, okay, this is where it tends to respect. This is where it has all of this stuff. As we can see here on the 1 hour, this is another level. We're going to have it here. Even at this point, it's a 1 to 3. Basically a 1 to 4, almost. Because if you want, you can hold it down here to this point. You're going to have price at either one of these take profits depending on like how comfortable you are holding. But boom, it's literally that simple. That's the strategy, and that's all you have to do. Vice versa if it's a buy. But for the most part, this is how simple it is. I hope I made it simple, like easier to understand. But that's all it is. Basically, looking for area of interest. You look for an area of interest on the higher time frame. Go to the smaller time frame. As we saw there, it broke under, came back, retested. Right? After it did that retest, it became bearish. Then when you go to a smaller time frame, you see that uptrend, right? Boom, you see the uptrend. So what you're waiting for is that break so that it breaks that previous structure and come back and retest it. Right? Once it comes and retests, it's either going to break past and disrespect it and just go about its day, or it's going to respect that previous higher low that it had on the smaller time frame and reject off of it. Whether it's a doji, whether you want to wait for a doji bearish engulfing before you enter, either way, what you need is a rejection. You need confirmation that it's going to respect that zone. Sometimes it's going to show confirmation. You're going to enter. And then price is just going to, boom, take you out. Or it's going to have that small push, hit this previous one over here, and then boom, go that way. Or it's just going to come down, respect this zone, and then boom, take you out later on. But with this concept, you're going to have a higher probability of winning consecutively to where you can make profits, especially if you're keeping the risk the same. And for me, for example, like I said, I tend to get like 1 to 3s, 1 to 5s. Recently, every time I've won a trade, it's been like a 1 to 4, 1 to 6. So it's very good. That's the only reason I really haven't lost anything, is because I can lose like 4 trades in a row. But if I win 1 or win 2, I'm already in profit, even though I just lost 4 in a row. And that's literally how simple the strategy is. What is difficult, really, realistically, is your mindset and how you approach the market. For me, what I'm still struggling with is because of the position I'm in financially, where it's adding stress onto my mental, and I'm not reacting how I would normally react if I had a decent amount of money coming in. This is me being real with y'all. I would say get a job where you have the flexibility to learn trading and have the time to trade, but as well where you're making just enough for where you can like take care of what you need to take care of and not have to stress too much about money, so that you can focus on just mastering it and doing it the right way. Because if you are stressing too much and you're thinking about the money, it's going to sneak up on you, and you're not gonna do things that you have set rules for. You're gonna end up breaking those rules. You're gonna end up doing things that you weren't supposed to, and you know you weren't supposed to. But because of all that stress that's in the back of your mind, it's gonna creep up and have you do things that you weren't planning on doing. So that's one thing I would for sure want to push out there is don't try to, obviously, if you have the opportunity to do certain things and you don't have to pay for stuff, like you have your parents pay for your stuff or stuff like that, then that's great. And it's even better for you because then you don't have to stress too much. You can just worry about the trading. But realistically, if you have to pay for your own things, you have to pay for, let's say you don't have to pay for rent, but you have to pay for car insurance, you have to pay for your gas, you have to pay for your car, you have to pay for your phone bill and all that other stuff. Trying to do the trading and then focusing like, damn, I have to make this money so that I can pay all this other stuff. It's going to add on to your mental, and you're not gonna think clearly. So get a job that's consistent, where it depends on your hours, so you can calculate exactly how much you're making, and you can be like, okay, I'm gonna use this for these bills. I'll have this for the food. I'll have this so I can invest into the trading. I have enough. I don't have to worry about anything. I'm good. And boom, you just continue doing what you're doing with the trading and using that job for you to become comfortable for now. You don't have to be comfortable forever, but as long as you're comfortable for now, so that when you're trading, you have a clear mind and you're set on the markets in the right way, then you're good. And that's pretty much it. Yeah, I already did. I explained the strategy as simple as I could, as well, like what you tend to see when you go on lower time frames. I'm gonna make other videos for like the fundamentals and all that stuff. But for the most part, once you see the fundamentals, you can always come back to this video and see it. And then if anything, I'll make just a video just for the strategy, so I can explain it again in more in depth. So once you guys see the fundamentals, the trends, the candlesticks, all that stuff, and you understand it better, then you can understand the strategy to its full extent, as I try to explain it here. But if you guys like the video, leave a comment down below. Obviously, if you can, leave any tips that I can take in so that I can teach better, or something that would allow you to understand what I'm saying in a like in better words. And yeah, any comments, I would really appreciate it as well if you like the video, and if you want to subscribe so you can see how I grow from how I am now to the future, because I'm trying to grow with whoever's willing to grow with me. And I already know once I do make it, I most likely am not gonna charge it anything. I'm gonna have it free and just try my best to get as many people to take the risk in trading and benefit from it, so that they can genuinely live their lives. Like, that's really what I want to do. Obviously, I want to live my life and do what I want to do, but I want to be able to have other people do the same exact thing, because I feel like I'll feel amazing. Like, knowing that I was the one that helped them get to that point, and now they can do whatever they want with their life and like genuinely enjoy and not have to worry about anything. But yeah. Again, hope you guys liked the video. I'll see you guys on the next one that I end up making sometime within this next week. And yeah, dale.